Welcome to Colombia. No, not everything's perfect. It seems like the poor will always remain poor.
It all starts with the financial sector in Colombia, composed by credit and non-bank financial institutions. The banking sector has expanded in the past decade, supported by general economic growth. The number of national banks continues to be around 14, and foreign banks numbers have increased. Various institutions, such as the security network of the Colombian financial system, attempt to preserve the stability of the financial system. Around 30% of the adult population is unbanked, partially due to the state restrictions that prevent banks from achieving sufficient coverage of all credit demand, which results in a shortage of credit. Thus, these people are forced to recur to another system, which we have even begun to export. This system is known as Pagadiarios, which are basically illegal loans given at interest that seem superficially low, but which are actually way over the limit of usury. Often referred to as the ruin of the poor, they fuel criminality because of the association of the loaners with illicit activities, as these are able to manage its risk through unlawful force. Take, for instance, the case of Siniberto, who, in order to fulfill his dream of owning his own hair salon, had to resort to a pagadiario. He believed it was an attractive offer as it did not need co-signers, contracts, or credit studies. The only condition was that he repay the money and pay full monthly interest of 20% on the total disbursed. He then asked for 5 million pesos to remodel the house he and his wife had raised during 17 years of marriage. After not being able to pay, the debt was doubled. After a year, and along with accrued interest, the original debt amounted to almost 20 million pesos. Siniberto was, of course, not able to pay it back in time. He was then forced to not only hand over his house, but give up his daughter, and was eventually killed by the mafias.
So, how would a truly free financial system be?
Loans granted by banks would have their corresponding backing in real savings. This interest rate would fluctuate freely to reflect changes in the temporary preference of credit consumers, allowing the credit cost to be included in the risk rating of a potential borrower. In other words, the bank could apply a price discrimination relative to the risk it incurs for lending money. Whoever does not comply with ordinary requisites could be charged a higher interest rates, but never as high or as dangerous physically and psychologically as the pagadiarios.
So, what benefits would this bring?
On the one hand, financial institutions would enjoy an increase of their business by the exploitation of diverse lines of credit and by the consequent increase of the banking of the economy. On the other, people with no access to bank credit would have a solution to their liquidity problems and would avoid relationships with illegal lenders, mafias, and parasital powers.